Good morning, good afternoon, good evening to everyone. I'm pleased to welcome you to this month's Meet the Expert live event. I'm joined today by Andy Kite, our head of product at Legerity, an insight software company. Hi, Andy, how are you doing today?
Yes, good morning, Nicholas. Good morning, all. Yes, I'm doing well, thanks. We're actually off the west coast of Ibiza this morning, which is a fitting place, I suppose, to talk about streaming data in the context of accounting.
Wonderful. Thank you very much for taking some time out of your stay in Ibiza to discuss with us streaming accounting. So, this is the topic of today. And as a reminder, you can ask all your questions either in the comments on the LinkedIn live event or sending us an email at info@legerityfinancials.com. And we'll do our best to answer your question during the event. But if we can't, we'll get back to you via email or phone call after the fact. So let's get right into it. The first question that we had was really just to give a little bit of a view of streaming now. So historically, accounting has been a batch process. Why is there a hunger for streaming now?
Great, thank you, Nicholas. Yes, I think, well, across all aspects of life and in the modern world, people are becoming increasingly impatient and demanding of immediate outcomes. These include obviously having up-to-date information, which is the real focus of what we're doing. I guess examples of move towards real time in financial institutions are topically and you know of the current moment of settlement via crypto and other mechanisms taking fractions of a second, in contrast to the minutes, hours, and even days of previous generations of payments and clearing systems. Um, we saw about 15 years ago the introduction of CLS for risk-free settlement of foreign exchange, and that introduced a lot of focus on charging intraday liquidity and deadlines within a day for settling positions. And we've seen in the risk world the need to manage intraday risk. It's no longer sufficient for traders merely to manage overnight risk. There's much more focus on what happens through the course of the day, and linked to that, pricing and calculation of spreads that reflect changes in market conditions. Increasingly advanced technology and process in the front office means that these are performed in fractions of a second. We also see the trend for product administration and core banking systems such as Thought Machines Vault, cutting edge technologies that process transactions in real time, interface via streaming technology. I guess it's worth calling out that there's a difference between streaming and real time. So streaming technologies facilitate real-time delivery of data, but they don't ensure it. Streaming technologies can be used to move batches of data, and we've seen some organizations introducing streaming to make use of real time where it's available, but to stream batches of data where it's not. It may not be optimal, but it's certainly a stepping stone to enable the clients and banks and other financial institutions to move towards real time. And it's worth also considering a definition of what we mean by real time. And here, the latency, i.e. the speed of data, is really relevant to the function to which the data is being used. So for high frequency and algo trading, we might be thinking in terms of fractions of a second, whereas for finance functions, it's likely to be longer time intervals, of course. We also perhaps need to consider that cost is a function of latency, and so there's probably not a compelling business case within finance to strive for sub-second updates, but certainly maintaining balances throughout the course of a business day does have significant benefits.
That's brilliant, brilliant. Thank you very much. That's very interesting. So now, no, you explained a little bit why we moved there, but do all banks need to move towards streaming accounting, and what are the real benefits of this approach?
Yeah. So I'm not certain that all banks need to move towards streaming accounting. As we know, many of the processes performed within finance are fundamentally batch-based and performed on balances at the close of a period, whether that's end of day or a reporting period or end of year. Um, Interest is still generally accrued on a daily overnight basis. Classification of balances may be performed on stationary data to minimize noise. And this is true of other processes, such as moving retained income to shareholder equity at the end of the year. So fundamentally, a lot of accounting processes and finance processes are batch based, but there are distinct benefits to processing data in real time, streaming data through the landscape. First, of course, as you process data, as you receive it, it maximizes the window of time that is available to address issues. So if you processing and as you receive transactional information and seeing issues through the course of the day, you have much more time to respond and correct those before you run your close. And similarly, balances can be continuously monitored throughout the course of the day, and users immediately alerted to extreme or unexpected movements as they occur. So again, you can react to those as they occur rather than at the end of the day.
Yeah. Yeah, no, that's very, very interesting. So some very, very good points. And maybe so we spoke here about some of the challenge, some of the benefits, and if we were to go around some of the main challenges associated with this kind of transformation, how can firms successfully integrate streaming data into their accounting process?
Yeah, so I guess there are some challenges to overcome when you're moving into a streaming paradigm. And first and foremost, source systems must be able to provide the data via a streaming paradigm. It may be the case that some systems are able to deliver data in near real time. Some are connected to streaming technologies where others may not be, may still be delivering data via traditional file servers. Um, I think the subledger is a key way of decoupling some of the dependencies, and certainly technologies such as FastPost enable us to read data both from streaming technologies and also from traditional databases and file servers. So we can receive and process data as we receive it. Sometimes it will be up to date, up to the second, near real time. Sometimes it might be on a daily basis, but we can manage that within our subledger technology. Another, I guess, challenge is that working on stationary data tends to be considerably more straightforward than working on moving data sets. Some of the challenges that we have, obviously, with streaming and moving data are managing dependencies between delivery of data. So ensuring that we've got necessary reference data before the transactional data that we need to process through the course of the day. And therefore, when we implement streaming, we need to think about mechanisms such as hold and retry patterns to enable us, if we haven't got the reference data in place when we receive the transactional data, to hold on to those until the dependency is met and move forwards. These are all things that we have to consider within our design. Um, Another consideration is managing the interface between real-time and batch processes. So we just mentioned that a lot of what happens upstream is performed in real time. So trading, transaction, processing tends to be more real time, whereas the finance processes within finance ERP, GL systems tend to work more in a batch paradigm. And again, once again, the subledger provides a key point at which we can manage when we close our business and start running the finance processes. Other challenges more on a technical nature are ensuring that data is processed exactly once, each record is unique, and where necessary, events are processed in a correct order. So in certain cases where we're producing updates or processing updates, obviously we need to have the latest view processed last. So these factors are particularly difficult to achieve when recovering from a failure or outage. And so we have to have schemes within our design to ensure that that is robust. Also, when we're working with um, real-time data and on-demand views are provided to clients, there's an implication of greater availability and fault tolerance. It's not explicit, but it's often expected by end users. So we need to ensure that we have obviously high level of availability so that the balances that our users expect to be up to date are actually up to date.
Okay, okay. No, that's very interesting, and I hear a lot around. Actually, from what you're saying, there is a very big challenge of control and auditability, making sure that there is a consistency because of the impact of streaming and the changes that happen and how you want to keep control over all that. So the very, very, very interesting, and so. An assumption people have about streaming data is that it require extensive infrastructure because it becomes actually quite heavy. But to ensure performance, is this actually a true statement?
Yeah, so I think there's definitely pros and cons. We've spoken about some of the benefits of processing streaming technology in terms of providing updated, up-to-date balances, and also having time to react to any problems. And this second point also relates to the way that our technology is used. If we process transactions through the course of a business day, this distributes the workload over a larger period of time. So in some respects, we can actually help and relieve the pressure on infrastructure by spreading our work throughout the course of a business day rather than processing all transactions together in a batch at the end of the day. Um, the other thing we can do is maximize the use of technical resources by separating the work of processing transactions, i.e. through the course of the day, from the periodic end of day processes such as interest accruals and end of period reporting. And that makes optimal use of the technology, but for different purposes at different points in time.
So if I get what you're saying, it's there is a benefit of streaming that is of maximizing, I would nearly say, the value of your investments. You don't really change the way that you would do your accounting. It's just an ability to spread the intensity on your technology across the entire day, and at the same time enabling the team members to spread their work in a much more efficient way and being much more agile. Therefore, and those has very big cost implication for organizations.
Absolutely. I mean, it benefits right away across the operating model in spreading the process over a larger period of time and relieves the pressure from the end of day, from that time window that you have to process your close before the next business day. Yeah.
Very interesting. And therefore, so you spoke, a little bit about the risk, and we were discussing around getting the data and streaming and ensuring that all the transaction and the trail, the consistency remains. So, how can firms manage risk associated with streaming?
So in terms of implementing streaming technologies, I think one of the best ways to manage the risk across these projects is to apply a phased approach. Identify areas of the business to move to a streaming paradigm. Those might be areas where you're updating your core banking system to something like Thought Machines Vault that provides streaming capabilities. And decoupling the processes within finance by using a solution such as a subledger. As I mentioned previously, we can receive data from more advanced core banking systems and transaction systems where that's available on a streaming near real-time basis. Whereas for other sources that deliver in a more batch um, paradigm, we can still continue to receive those feeds via more traditional technologies such as database and file server, and indeed via more modern file delivery mechanisms such as the AWS S3 technology.
Yeah.
So basically, I would say in terms of minimizing risk, the best approach is to break the big problem down into smaller pieces, tackle the pieces that have a positive business case, i.e. tackle the low-hanging fruit to start with, and then once the confidence is gained through those areas, then roll it out more broadly across the firm.
And that's a very interesting point in terms of the implementation and how to go through a finance transformation, because very often when people think about doing finance transformation and tackling the accounting process, they're quite scared because they spent years and years implementing their GL, and they wonder, okay, what this kind of transformation will mean for all the investment that I've done. The fact that you mentioned that you can break this down and using a specific use case that's relevant, and then basically scaling or breaking down an implementation phase by phase, it's very interesting. And I suppose this is done because of our ability to integrate our accounting rules and subledger within the broader finance environment, and so we can address a certain part
Yep.
without um, having to change at the end the GL. We are step in between. Is that a correct
Yeah,
statement?
that's correct. And with a subledger technology such as FastPost and the components that we use within FastPost, we centralize our accounting rules. So once they're working in batch mode, we can relatively easily move to a streaming paradigm without changing any of the business logic. The same is applied actually when we perform ETL, data conversion, data transformation, upstream of the accounting rules within FastPost. Once we've implemented the rules within our technology, we can relatively easily translate that over to a streaming technology without changing any of the business logic. So it really does provide a useful point to decouple the process of moving from batch to streaming.
Okay, okay. No, so that's very, very interesting. And maybe the last question, we mentioned a little bit FastPost. We spoke about our accounting rules, our subledger. So how is, if you were to finish on that, how is FastPost enabling streaming accounting? Um,
So FastPost specifically, we have data sourcing components that use open source technology to connect to a variety of different sources, both, as I say, traditional, but also streaming technologies such as Kinesis and Kafka. So those are all available out of the box. And so these provide us essentially the tools that we need from a technical perspective. I mentioned before that the business logic is embedded into the product in such a way that it can be translated from batch to streaming relatively easily. Um, and having got the data into FastPost, the process is run on with very low latency, so that we can actually update balances and provide a view of finance almost on demand. And as I mentioned, we can manage the interface between real-time upstream systems and downstream systems to perform a controlled close, so to cut off the business from one day and process that and potentially reprocess the data that comes in after our cutoff time, process that upfront at the start of the next business day. So this also provides a means of managing the interface between the transaction management systems and the finance systems. Um, I think in general, systems like FastPost enable finance to move to more modern architectures and processing in real time in a controlled way, minimizing risk and maximizing benefit over the costs of updating various areas of the business. Um, and it has obviously advantages in providing up-to-date views of finance, extended with windows of times to address issues, and distribution of processing across a wider time frame, as we've discussed previously.
yeah.
And I'd also say, suitable subledger technologies like FastPost can address many of the technical issues associated with a control phase progression from batch to real-time processing with an organization. And just as a closing remark, as always, it's well worth managing the trade-off between costs of moving to a streaming paradigm for certain areas of the business against the true benefits. And it may be decided actually that some parts of the business may continue to work in batch, where others work in a more streaming based approach.
And you're absolutely right. There is no need to change for the sake of change, but the benefits where it can have a true impact can be massive from an operational perspective, and that's a very interesting. I know from the discussion with a lot of our customers, they're always trying to think about finance transformation as a way to optimize process, optimize cost, and reduce the dependencies on other people. And from what you're saying, streaming seems to be a very good way to address those more operational challenges.
Exactly.
Um, and so this actually brings us to the end of today's Meet the Expert session. So Andy, I just want to say a big thank you. Maybe you have any, you just say a little bit of the conclusion on today's thought, but anything you would like to add on today discussion on streaming?
Yeah, basically, just to reiterate what the message that you've presented, Nicholas, that there are definitely benefits to moving to streaming paradigm in certain areas of the business. It's worth assessing those, picking off the ones that have the greatest benefit and perhaps for the minimal cost to start with, and then progressing as appropriate across the remaining parts of the business. And introducing a transparent rules engine that has streaming capabilities as a point of decoupling the architecture is a good way of achieving this in a predictable and risk-free way.
Wonderful, wonderful. Thank you very much. So now to finish, just a quick word about the Legerity FastPost, an insight software company. FastPost is the next generation accounting rules platform. It's designed and developed for large volume of complicated data and processes. It's a cloud-native, ultra high-speed performance built with the latest open source technology, which enable us to do the streaming and these kind of things. And so if anybody feel that they would like to know more about our solution and how it can help them to their finance transformation, I really invite you to go on our website and ask for one of our specialists to contact you. Otherwise, you can always write to us on LinkedIn or follow us actually on LinkedIn so you can get the latest news on Legerity or webinars, events, and any other relevant information to help you with your finance transformation. On that note, I just want to say again, thank you, Andy. Thank you, everyone who attended, and have a great rest of the week.
Thank you all. Bye.
FastPost is the next generation accounting rules platform. Cloud native, ultra high performance, developed using the latest open source technologies for large volumes of complicated data and processes. Finance departments are under pressure. Legacy systems are creaking, inefficient, and error-prone. Forward-looking CFOs are driving change. Finance today is more than just accounting. Multiple stakeholders, clients, regulatory challenges, and the new digital world need a single version of the truth. Granular, accounting-validated data on demand. FastPost is modular, fully integrated with open interfaces and APIs, and the ability for user-defined business rules. Setting the standard for the next generation of accounting rules and subledger technology. We shorten processing time from days or hours to minutes. Offered both as a software and platform as a service, providing flexible and rapid deployment options to match your business needs. FastPost. Finance with confidence. Legerity. It's our business to take care of yours.